Welcome back today. This is John Mazzaro with Remax Results. We have Lee Davis with U.S. Bank. He's back to visit and highlight one of the programs over at U.S. Bank. It's a conventional portfolio loan. I'm going to let Lee take it over from there. So, Lee, tell us what you got.
Yeah, absolutely. John, thank you for inviting me back. Little Mortgage World, very excited to be back, and I really want to share some highlights about the U.S. Bank specific portfolio product. It's called the American Dream. Uh, you might have heard it. It's been around for a while. There's been some updates to it, which is kind of nice. But really, the goal is to keep people in a conventional product, so they're not paying PMI if they don't have to, and they're also able, to refinance and be able to stay in their current homes and offer some other down payment assistance. So, specifically, what I wanted to talk about is some of the highlights of why you would do this. And so, really, the main why is, like I mentioned before, a conventional product. This one actually is lender paid PMI, which is maybe a little bit different, where U.S. Bank actually pays the mortgage insurance for you, and then it's still protected under the product. So if you have issues failure down the line, you have the protection similar to an FHA product, but you have a conventional product where you're not paying PMI at all on your monthly payment. Again, lower monthly payment, and then you're able to keep that down. The interest rates, sometimes fluctuate a little bit depending on what you qualify for, kind of make up for that. But just know it's very close to market rates. And I know, as I saw, I think last week, they were very similar to Minnesota housing rates. So,
Hmm.
that's something that a lot of people are using, and you're able to get down payment assistance, as well as using the product. So, one thing I want to highlight too is there is some stricter, debt to income ratio limits on it. A change is that it used to be just a hard stop at 43%. So, people at home, if you're doing, your own budgeting, just think about your housing ratio of how much that would be, compared to, what monthly income you're making. But now we have put in an overlay where if your FICO is above 700, you can go up to 45% and sometimes up to 50 with no payment shock or additional, and there has to be additional compensating factors. Payment shock means you're not paying double now than what you were for renting, and then compensating factors. They're just pretty much good highlights on your resume. You made payments on time. The FICO score is good. Low debt. They'll go in and look at all those things as a total financial picture. So those are some new highlights. Another highlight that may help some is the 2 unit or multi-unit opportunities. Those used to be a hard 15 to 20%, and now they have used the same guidelines as Minnesota housing to go down to 5%. So you only need 5% down. And also to reiterate, for the single family, you only need 3% down. So those same conventional rules and regulations for Minnesota housing, maybe some other conventional products that you've seen out there, this has the same. With 2 unit, just be careful. There is some different reserve requirements. I think with with that, the reserve requirements come for about 2 months, depending on LTV, loan to value, and then sometimes it's 6 months if you have you'll need 6 months of reserves if your FICO score is at a 680, and your LTV is greater than 90%. So just make sure you're working with your lender, pretty closely. Work with U.S. Bank of what your whoever you choose to see where those are before applying, so there's no surprises. Um, do you have any questions, John?
Yeah. So the name of the product is called American Dream.
The American Dream, yes.
Okay. And how would this product differ than a straight, regular, conventional, 3% down conventional loan?
Yeah, great question. So I'm going to take this into if we had a U.S. Bank agency conventional loan compared to this portfolio conventional loan.
Hmm.
So the loan to value parameters are the same. I would say the biggest difference is one, which we're excited about, is the down payment assistance capabilities. So you can go up to 3% of the purchase price, um, and then it's up to about 12,500. So it's an actual internal down payment assistance program facilitated by U.S. Bank. It's not not Minnesota Housing. They're not going through a nonprofit. Like normal. This is an internal program where you'll be eligible for, and again, as long as you're within those requirements. And then again, the biggest thing is the PMI, and so where this is lender paid. Um, Conventional, if you had a traditional conventional product, you would still see PMI on there. It would just be at whatever PMI rate you qualify for, and then it'd be at the declining, fall off or refinance after 80. This one doesn't show up from day one because of the lender paid um, mortgage insurance.
Okay.
So we're very lucrative, and some other things too. They increase the income limits to where the difference between this and maybe Minnesota Housing. Minnesota Housing has the cutoff at 89,000, and this one for one to two households. This one goes up to 124,000 for an income limit. Uh, no, it does not depend on the household size. So it can be one or it could be 10. So it's pretty lenient on that, which is kind of nice for definitely multiple buyers, multiple borrowers trying to qualify for this. And yeah, I think it's a great opportunity for those that that can find themselves in this niche.
Awesome. So two more questions for that. So the
Yeah,
3% up to 12,500. So effectively, if I'm a borrower, do I need any of my money, or could I effectively finance 100% using, now is it a grant or is it a second mortgage that up to the 12.5?
great question. I'll answer that twofold. One is the same parameters as Minnesota Housing. So you just need 1,000 of your own funds.
Okay.
That 12,500. Again, it doesn't. It's not an FHA product, so it doesn't have to be anything but the 3.5% down. So this one is just the 3% down, which the 12,500 can include, and the borrower just needs 1,000 of their own funds.
Okay. And then that's not a grant, it's a loan,
It
correct?
it is yeah it is a grant. Yep, you're not paying a monthly payment on that, so
It's a grant, so I never have to pay it back, or you
you'll
mean it's
never.
just deferred interest?
Yeah, so great. It's the deferred interest, and again, similar to the deferred Minnesota housing, where if you refinance or sell the home within between 5 to 7 years, I think five is the cutoff. You'll have to pay that back with the payoff. But as far as a monthly payment, there's no monthly payment. It is essentially a deferred grant that you get to use for its down payment and closing cost.
Okay. And then if I'm there 5 years, it's forgiven?
It's forgiven, correct?
Wow. So that's pretty sweet, because most of the time a loan is a loan. So is 5 years, is that the cutoff, or is it longer than that?
What's that? I'm sorry.
Is it 5 years, or is it longer than that I have to live in the house to get that
As
free?
long as you don't sell it or refinance before that 5 years, it falls off.
Okay, that's awesome. And then what if I'm in there for? Is it like 20% per year, or is it all or none with the 5 year stop?
I believe it's all or none.
Okay.
They see when the origination date is, and then they see if it falls off or you pay it off with the payoff.
Okay. So if I'm there 5 years, I'm going to get that money that I took out that I didn't make a payment on for the down payment and closing. I'm going to get that free, instant equity.
Absolutely.
Beautiful.
And then I just want to add one more layer to this is our special purpose credit. So it can be up to an additional $5,000. So the thing about this is that it has to be in a low to moderate income area. They're really trying to focus on that. So you have to be moving into it. So with that, you can use that towards like a lot of things, paying things down, paying things off to help you qualify. Um, and it's really anchored towards again the low to moderate income or low moderate income areas to start developing that. So just know that there could be a separate tier for that special purpose credit. You can get an additional $5,000.
Wow. Okay. And that's area specific, not necessarily. Borrower specific?
Yeah, so it has to be in a low amount of income area,
Okay.
and we have the maps for it. Just verify. But you might be surprised at some of the areas that that qualify for it.
Wow. How sweet is that? A little extra bonus. Didn't know it was coming. All right.
Absolutely, that came out last year, and it's been relatively popular. It's just again finding the right person to qualify for it and finding that right area.
Wow. Okay. Well, this is awesome. And then the this is only U.S. Bank because this is your money. So if a borrower goes over to a different lender, they're never going to hear about this because they don't have
Correct.
it. Correct.
Correct. Yep. It's internal portfolio, conventional product. Again, they've been refining this the last couple of years, and I think with the FICO extension and the DTI extension, we're definitely going to see some more activity with this in the years to come.
What's the lowest credit score that somebody could have to do this product?
So so remember, it's a conventional product, so we try to keep the scores above 680. As you know, the desktop underwriter, it doesn't love once it starts creeping into the 670s, 650s. So I would say 6A is the cutoff, just so the
Okay,
desktop underwriter gives you a solid approval before it goes manual. Because again, you want compensating factors for some of these as well. So just make sure FICO is not one of them.
okay, beautiful. This is great information. Um,
Absolutely.
and
So yes, you can let me know or let John know what kind of questions you guys have. Again, this is for someone. This is again, it's not one size fits all. It's not for everybody, but it's for someone with lower debt, looking for some internal down payment assistance. Great product for someone that just is over that down payment assistance for Minnesota housing. Again, that 89,000 that they don't qualify, but now they can qualify for this because the income limit's up to 124,000.
mhm.
Um, and again, multiple borrowers, so they're not paying PMI. They get a nicer home and get to try to use the that internal down payment assistance.
Well, and let's highlight that because if somebody sees you and you're getting them pre-approved, if you're going down, let's say the MHFA route first, and then you
Yeah,
find that they don't qualify because this is your program, you can flip them over to this program.
correct,
But another
correct,
lender, that might do MHFA that doesn't have access to this program is going to have to say, hey, you know what? You make too much money. The down payment that you're hoping to get, you can't get. So you got to come up with
correct.
another way. Whereas you can go up, nope, you know what? We got 12 up to 12.5. We got our own internal product. We've got this gap program that'll fit you perfectly. So that's the real
Yep,
difference with the US Bank
absolutely.
and you versus, let's say, a broker that's brokering to MHFA, but you're right at that cusp. They don't have this product. So
Try to problem solve, right? I think
yeah,
I think something great that you do that we've chatted before this call, even just finding some solutions for people and just knowing the ratios and stuff in the back of your head, back of your mind, back of your head, or at least have them posted somewhere, which I do because they change all the time, right?
for
You
sure,
don't
for
want to
sure.
overpromise, and I think with some of these, if you ask the right questions, it could benefit people.
Awesome. Well, this has been great, Lee. Can you tell everybody? I'm going to have it in the body down below of the video, but how can they reach you if they're watching and they got a pen and they want to write it down?
Yeah, 100%. So you can call me directly, 612-618-7781. You can email me at lee.davis1@usbank.com.
Perfect.
And then either that, you can go to my website to find out either more about me or the product. But let's just have a conversation to see what, I have discovery calls, obviously free of charge. You can meet me at my branch or, call me on the phone. We'll just find out what works better for you. And, my goal, FHA is great, but my goal is to get as many people in conventional products as possible to keep their monthly payment down, get PMI, have them fall off, and then just know that they have that opportunity.
Awesome. You're a lender for life and a loan counselor, not I call them rate quoting monkeys. You never want to go with a rate quoting monkey. You want to go with somebody that's going to be a problem solver, be a counselor, be a solution. And that's what Lee is doing here. He's providing a solution. You should give him a call and he'll guide you appropriately. Thanks for coming on today, Lee.
Thank you, John. I appreciate your time.
You betcha.